7. Financial mistakes that are destroying your future. Have you ever wondered why some people seem to build wealth effortlessly while others struggle financially their entire lives? Most people believe that becoming wealthy is all about making more money, but the truth is, financial success is often determined by avoiding the mistakes that quietly destroy your future. Today, we're going to cover 7 financial mistakes that could be costing you thousands or even hundreds of thousands of dollars over your lifetime. Let's get started. Mistake number 1. Living above your means. One of the biggest financial mistakes people make is spending more than they earn. Many people increase their lifestyle every time their income goes up. They get a raise, buy a more expensive car. They make more money, move into a bigger house. This creates a dangerous cycle known as lifestyle inflation. The problem is that no matter how much money you make, if your expenses grow just as fast, you'll never build wealth. Wealth isn't determined by how much you earn. It's determined by how much you keep. The people who become financially successful aren't always the highest earners. They're often the ones who control their spending and consistently save and invest the difference. Mistake number 2. Not having an emergency fund. Life is unpredictable. Cars break down. People lose jobs. Unexpected medical bills appear. Without an emergency fund, even a small financial setback can become a disaster. When emergencies happen, people without savings often turn to credit cards or loans, creating debt that can take years to repay. An emergency fund acts as a financial safety net. Most experts recommend having at least 3 to 6 months of living expenses saved in an easily accessible account. It may not seem exciting, but it's one of the smartest financial moves you can make. Mistake number 3. Accumulating high-interest debt can be one of the biggest obstacles to building wealth, especially high-interest debt. Credit cards often charge interest rates of 20% or more. At those rates, debt grows incredibly fast. Imagine investing your money and earning 20% every year. That sounds amazing. Now imagine paying 20% every year instead. That's exactly what happens when high-interest debt is left unpaid. The longer you carry debt, the more money you're giving away to lenders instead of building your own future. Before focusing heavily on investing, many people should first prioritize eliminating high-interest debt. Mistake number 4. Waiting too long to invest. One of the most expensive mistakes people make is waiting for the perfect time to start investing. Many people tell themselves, "I'll start when I make more money. I'll start next year. I'll start when the market is better." But time is one of the most powerful tools in investing. The earlier you start, the more you benefit from compound growth. Even small amounts invested consistently can grow into substantial wealth over decades. The biggest advantage isn't having more money, it's having more time. Every year you delay investing is a year you can never get back. The people who build significant wealth often aren't the ones making the highest returns. They're the ones who started early and stayed consistent. Mistake number 5. Trying to get rich. Quick social media is filled with promises of fast money. Get rich in 30 days. Turn $100 into $10,000. Make 6 figures without effort. These promises are incredibly attractive because everyone wants shortcuts. But wealth rarely happens overnight. The pursuit of quick riches often leads people into risky investments, scams, gambling, and poor financial decisions. Building wealth is usually boring. It involves patience, consistency, discipline, and long-term thinking. The sooner you stop looking for shortcuts, the sooner you can focus on building real financial security. Mistake number 6. Not increasing your income. While controlling spending is important, there is a limit to how much you can save. There is no limit to how much you can earn. Many people spend years trying to cut expenses while completely ignoring opportunities to increase their income. Learning new skills, starting a side business, negotiating a raise, building additional income streams. These actions can have a much larger impact on your financial future than saving a few dollars here and there. Wealth is often built through a combination of smart spending and continuous income growth. Focus on both. Mistake number 7. Having no financial plan. Imagine trying to drive across the country without a destination. You would waste time, fuel, and effort going in circles. Yet this is exactly how many people manage their money. They earn, they spend, they save occasionally, but they have no clear plan, no goals, no strategy, no direction. A financial plan doesn't have to be complicated. It can be as simple as defining your goals, creating a budget, paying off debt, building savings, and investing consistently. Without a plan, it's easy to drift. With a plan, every financial decision becomes more intentional, and over time, those decisions can completely transform your future. Conclusion. Most people think financial success is determined by one big opportunity, but in reality, it's usually the result of avoiding common mistakes and making smart decisions consistently over time. Avoid living above your means. Build an emergency fund. Eliminate high-interest debt. Start investing early. Ignore get-rich-quick schemes. Increase your income, and most importantly, create a financial plan. Your future wealth depends less on what you do once and more on what you do every single day. If you enjoyed this video, make sure to subscribe to Wealth Theory for more content on personal finance, wealth building, and financial freedom. Thanks for watching, and we'll see you in the next video.